Well, time to move on then, and let's invite Borosil Renewables. Remember, the revenue growth was a little bit tepid, margins as well a little bit under pressure, but the hope is with the SG3 coming on stream, revenues will perk up from here on. To understand the way ahead, we're joined by Mr. Pradeep Kheruka, the chairman at Borosil Renewables. Hi, sir. Good morning. Thanks so much for joining in, Mr. Kheruka. Well, SG3 furnace has now got commissioned, and you'll have the full benefit for the entire quarter this time around. So for the next couple of quarters, can we assume the standalone revenues goes to, 320 crores odd for the first half of the year? And also, do we see margins improve from here on? Have they bottomed out? Do they return to mid-teens? So revenues are 300 crore per quarter plus and margin improvement. Go ahead, sir.
Thank you. Well, I do believe that revenue should definitely perk up and they should cross 300 crores a quarter going forward. We must keep in mind that this furnace that we have just launched is more than twice the size of the existing furnace that we have. It's not just that, it's a very large process plant, which means that after you've melted the glass, you have to grind every sheet of glass, you have to wash it, you have to clean it, and then you have to temper it and pack it. So it's a very long process line, and it takes a little bit of time to tune it up. Fortunately, there are other things that have been happening, which is that, we were the first mover in the 2mm glass market back in 2017. It's taken some time for that to catch on, but now, at least in China, for example, they no longer use any other thickness for modules which are made for domestic consumption. And 3.2mm, which is the old standard, is now something which is relegated only for the export market, which is usually a little more backward in terms of technology than the Chinese market itself. So we are fortunately geared up to meet the demand for 2mm glass as it arises in our own country. And that would give us some benefit in terms of slightly better realization on that.
Okay. Margins,
yeah, the margins, you see, the thing is that I believe that there have been two major enactments in the world. One is in the United States and one is in the European Union, where they are talking about the Inflation Reduction Act, which is a sort of some other way of saying that they're going to protect domestic solar industry. And the same thing is happening in the European Union. So the Chinese had expanded in a very large way, and they are very, very large today. So they are, there is a lot of stuff available in China. Plus, of course, the subsidization is very high. So they are able to throw products at us which are subsidized at very low prices, whereas we have absolutely no protection whatsoever from the Indian government. And the Chinese goods are coming into India completely free from duty. And we've been agitating for it. Yes.
Yeah, you had protection, and you were on that point. You were making that you've been asking for it, right?
We had applied for anti-dumping back in 2017, and we had gotten it for 5 years.
Yeah.
We had applied for a renewal of this in terms of the sunset review, and this had been recommended by the Ministry of Commerce, who had undertaken a 2-year study in order to determine whether this was required or not, and so on. After the due process, it was recommended. The Ministry of Finance turned it down with absolutely no comment, saying that it's not in the public interest to do so. And the result is that we are today suffering from duty-free imports of glass, and we are paying all duties and taxes. The costs of inputs have gone up by about nearly 60-70%. And we have the cost of glass coming in from China has dropped by something like 25%. So this is very clearly a strategic move, a political move to take control of solar industry worldwide. And they don't like what they see in India, where India is trying to to develop its own industry. And it would be very nice if the government was to support us on this. This is not the way to do Atma Nirbhar. I mean, here we are, we went up from 450 tons last year to 1,000 tons today. It's a dramatic improvement in terms of our what we have invested in the company.
Correct.
Regardless of all that, we do hope that margins will go up somewhat. And we expect to make new products like 2mm, like I said. It's kind of a different product. Yes.
Right. Mr. Kheruka, the government, and we've been talking about manufacturing, and the government across industries has been encouraging manufacturing, make in India, as you've been saying. But yeah, I mean, your industry, as you're saying, is still awaiting protection. Let's assume, and you said that there is a sharp drop, right, in terms of stuff coming from China, some 20-25%. Assuming we don't see protection come through this year, I mean, if it comes, that'll be great. If it does not, for FY24, will you be able to hold on to these margins from in terms of what you've done in FY23, which were just under 26%?
Well, it's like this. FY23 started from April 22, and clearly the prices then were better because the prices from China have been dropping in the meantime. But we have a Q4, and from Q4 we should definitely do better, partly because Q4 saw a lot of expenditure for the SG3 furnace in terms of the fuel cost and the manpower cost and so on, but saw no revenue. Now we're going to be seeing revenue coming in from that, and that should definitely elevate margins. And the same thing in Germany, for that matter. You know, we had a furnace repair which started sometime in March, and the furnace has resumed since then. And the demand is very strong there as well. So both in India and Germany, we expect that the margin should definitely improve going forward.
Okay. Mr. Kheruka, can you help us with a couple of details on what the market share is currently at Borosil Renewables? And you've seen a fall in market share, I understand. You've been losing share, amidst weakening prices. So how much share have you lost in the last 6 months, and what is the expectation by the end of FY24?
So actually, we have lost no share at all. We continue to sell all that we produce, and all that we have allocated for the domestic market is very, very easily sold. There's no problem in that at all. What has happened is that module manufacturing in India has really boomed. And when we melt 1,000 tons of glass, we are able to deliver about 650 tons out of that into the Indian market. And the imports on a daily basis are 2,200 tons of glass. I mean, it's staggering. And we have Indian capital, we have Indian expertise, we have Indian people ready to manufacture this glass. But if the margins are going to be so low, the government is discouraging Indian investment in solar glass, at least.
All right.
Really bad.
Yeah, sir, we hope that by next time you get some, you've made your plea out there, and hopefully, if it's in the interest, then hopefully you get some relief on that front. But a final question, sir, before I let you go. The standalone business EBITDA has fallen drastically. It used to be around 30%. Those days are gone. It's come down to early 20s and a little below 20% as well. You said it will improve from here on. So give us a rough band. At current reckoning, we have the revenue number, 300 crores per quarter. What should the margin band be?
See, like I said, the last quarter is an indicator of the things to come in terms of the cost. The last quarter results that you see have just 5% more sales than the past, and than the same quarter last year. So, or the previous quarter. So, we expect sales to rise dramatically because now the production is on. And in this quarter, we're still ramping up. By the next quarter, from July to September, we should be going full throttle. And we expect to make about 550 tons from this as against 450 in the past. And we would be pitching for 600 tons a day, actually. That's what we're going to be trying. Let us see. We are quite enthused about the future ourselves in the factory and in the team.
Sure. Mr. Kheruka, can you just help us with how the raw material prices are now, soda ash and natural gas? What is the trend looking like, and how would that be aiding your margins?
Soda ash finally seems to be available. Last year it was sort of not available. It seems to be available. And then there are people saying, would you like to buy? And they're talking of small discounts. So we don't see prices of soda ash escalating sharply anymore. So they might be flat, they might decline very slightly. Cost of gas also. In Europe, the price of gas has really dropped dramatically. So the price of the international price should also be seeing a result of that drop. And so the price of gas might drop a little bit. Fortunately, we have a dual fuel fired furnace, and we use furnace oil. So for the past several months, we've been using a mix of furnace oil and natural gas. So furnace oil is less costly than natural gas for us. So this flexibility has come in very useful to us at this time. So we hope that input costs should not be escalating too much going forward. They should hold steady, more or less.
Okay, got that. Mr. Kheruka, before we let you go, just one, you mentioned that 2,200 tons of glass being imported. You gave that number.
Yes.
That is over what time period? That's daily.
Every single day.
Okay. What's the local production daily industry?
650 tons from us and 100 tons from a new startup called Govindev Glassworks Limited.
Okay.
Shri Govind Glassworks Limited, yes. They're doing about 100 tons a day, I think.
Wow. And the total, I mean, and all of it gets sold?
All of it is, absolutely. The problem
okay.
is the price, but there's no problem in consumption.
All right.
It's absolutely saleable. So we are batting very strongly for, there is a 15% basic customs duty on the books. But interestingly, there was a circular which was issued in 1999 exempting imports from payment of duties because there was nothing made in India. That circular is still valid. So if they withdraw that circular, the duty kicks in at 15%, which would be much better than what it is today.
Mr. Kheruka, thank you very much for explaining all of it very well. Thank you for joining us, and we hope, your plea and your appeal is heard by the time we have our next conversation. Thank you very much for joining us, and good luck, sir.